Welcome to another episode in my Transparent Trading series. This is your host, Trader Travis. And if you're new to this series, this is your front row seat into my mission and journey to take $1,000 and turn it into $1 million trading only one stock. Now, I begin this journey with two accounts that I will use as a side-by-side comparison for performance. In the first account, I invested roughly about $1,033 using a traditional buy and hold approach. And then I have another account where I'm investing about the same amount, and I'm only going to trade options with that account. Now, in today's video, what you're going to do is watch the results of the first few trades I made on this journey, and I hope you enjoy. So here I am in my Roth IRA, which is held within my TD Ameritrade brokerage account. And I just placed my first batch of trades, and these trades brought in an immediate 24.4% return on my account balance. Now, most people wait years to earn 24% on their money, but with options, it can happen in just a few moments. Now, before I walk you through these trades, I want to share where my mind is at right now, and a key distinction that I think makes this trading style unique, or at least a trading style that I employ. Now, I'm currently reading a book, A Random Walk Down Wall Street. I'm not completely finished with the book, but I'm about 3/4 the way through. And this book has challenged me in several ways, because a lot of things, we differ in a lot of ways. But on page 154 of this latest book, there's a quote in there, and it says, "Not one has consistently outperformed the placebo of a buy and hold strategy. Technical methods cannot be used to make useful investment strategies. This is the fundamental conclusion of the random walk theory." Now, part of me was bothered by this, as well as other mentions in the book about how technical indicators are not really useful and how people can't reliably predict what the stock market is going to do. Now, I personally know people who try the buy and hold method or the random walk method, and they really don't succeed. But I think, they talked about predicting the stock market. Now, personally, I don't think I'm a person who, tries to predict the stock market. I'm actually the opposite. Yeah, I use technical indicators and things. And in my opinion, or my experience, not really my opinion, but my experience, they have helped me. But I definitely don't feel like I predict the stock market. I'm not married to what I think the stock market is going to do. Often people will ask me, what is the stock market going to do? What do I think the stock market is going to do? And my answer is always the same. I don't know. I don't care, because the stock market doesn't care what I think. It will do what it wants to do. So what I do is I trade in a way I feel like I can never be wrong. I don't trade based on what I think, because trading based on what I think or investing based on what I think, it gives me a 50-50 chance of succeeding. Right now, recently, if we pull up a 3-month chart of the S&P 500, we can see the market had a huge downturn and is kind of consolidating and slightly going back up. A lot of people are predicting another downturn right now. If that happens, they are correct. But if it doesn't happen, they're wrong and they could lose money. So it's a 50-50 chance. So the way I trade is in a way that I feel like I can never be wrong. I trade or invest based on what the market is actually doing. And when the market changes what it's doing, I change with it. Okay, so looking at this is a 2-year chart of the same S&P 500 chart. I'm 100% correct that it's going up. Okay, 100% correct. Now, when it changes directions and it stops going up, like here, it stopped going up, then I change with it. And there are ways to do that. And that's, again, using technical indicators. That's, in my experience, how they have helped me be pretty consistent at changing with the stock market, or changing with the stock market as it changes. It's kind of like an ebb and flow. The way I explain it to my students is, think of the stock market like your spouse or your dance partner. You're dancing, right? We're a team. We're working together. And when couples grow apart in a marriage, what happens? They either get divorced or they stay unhappily married. Okay, so coming back here to the 3-month chart, some people think there's going to be another downturn. Some think there's going to be an upturn. That's a couple. They're apart. When they grow apart, if you think the market is going up and you buy a bunch of investments where you make money when it goes up and then it goes down, you're very unhappy. So you grow apart. I don't like to be unhappy. I'm the happiest and most fulfilled when me and my partner are of one mind. Okay, so that's why I said I like to look at what the stock market is actually doing and then get in alignment with it. And again, going back to that statement that was made in the Random Walk book, not one has consistently outperformed the placebo of a buy and hold strategy. So what my mentor taught me is that let other people argue over either or. So thinking of the stock market, there's two groups of people who usually invest in the stock market. There are people who you call fundamental analysis. They take the inner workings of a company like Starbucks, earnings, profits. They look at all the inner workings. They say that's the best method. Some would say Warren Buffett, the world's richest investor, is a fundamental person. He looks at the inner workings of a company and things like that, management, all that. Then there are people who call technical analysis. They don't look at the profits. They don't look at the inner workings of a company at all. They don't care about all that. They really look at the chart, the stock chart, because they say everything you need to know is on the stock chart. And they use technical indicators, patterns, and all that. Luckily, I was taught by one of the people I was taught by taught me, you let other people argue over which method is best, because those two camps will argue that fundamental is better. Investing based on fundamentals is better than the technical people will say investing based on chart reading and things like that is the best. He said, you let them argue over either or. You be the wise person. And how about you do both methods? Okay. And I'm like, So that way you're getting the best of both worlds. So another way I like to look at this is whenever I encounter someone who has a different opinion of mine, I don't argue with them or try to persuade them to see things my way. That's too much work. I simply let them keep their opinion and I'll keep my real world results. So they can keep their opinion and I'll keep the money I've made from doing what they say is probably not likely to happen. Again, these trades brought in an immediate 24% return on my account balance. Now, some people will say, oh, that's not possible. It's because they've never seen it. They've never succeeded at it. They don't know how to do it. And so they just think it's not possible and they believe in buy and hold. And they will argue that what I'm doing right here is get rich quick or not possible. I'm like, you know what? Again, you keep your opinion. I'll keep my real world results. However, with that being said, I am not willing to risk my future in the fact that I could be wrong. So let's come here. That's my Roth. Let's come here to my regular brokerage account. Okay. That is why I choose to do both. Again, using what my mentor taught me. Don't be either or, do both. So I am doing a traditional buy and hold approach on Starbucks. I bought 18 shares at $57, roughly $57, and invested $1,033. Okay. I am taking that same $1,033, putting it in my Roth IRA for an options account, and I will trade options side by side with this buy and hold approach. Now, I'm a firm believer in trading options because I think they are a perfect hybrid between a lottery ticket, protection against losing a lot of money, and earning a monthly income, which you'll see, as this journey unfolds. Just as you saw earlier, the trades I just showed you, they brought in an immediate 24% return on my money. However, this buy and hold method will be my backup. Okay. So you, I, and the rest of the world, we can compare the real world results and then determine which method is best for us. Again, I prefer to let people keep their opinion and I will keep my real world results. So coming back here, let me walk you through the thought process that went into and also the tools that I use to place these trades right here. I want to thank you for taking the time to watch this video today. I hope it added some value to your life. And please know these videos are free and open to the public, but the video you just watched is a snippet of the full-length training. If you want the full-length training, or maybe you want to learn how to do this yourself, just join the Transparent Trading Academy. Membership in the Academy is completely free. It's my way of adding value to your life without you having to pay me a dime. And as a bonus for joining the Transparent Trading Academy, you'll receive the Hot Stock Formula. Now, that's a formula we follow that allows you to find the top 10 to 20% of all stocks in the market. Again, if you're interested, just drop on over to tradertravis.com and sign up for your free membership. You take care, and I'll talk to you soon. Bye-bye.